Time for a look at the latest business news here on France 24. I'm Kate Moody. We begin in Turkey, where Recep Tayyip Erdogan has called for a new era under his leadership as president. He served as prime minister since 2003 and is credited by his supporters as ushering in a golden age for the Turkish economy. The country's GDP averaged 5.5% growth per year over the past decade. But that pace slowed to just over 2% last year, and inflation is double the central bank's target. Critics warn that Erdogan's model of economic growth is unsustainable. Jade Barker has the story.
The economy, Recep Tayyip Erdogan's secret weapon. Since he came to power over a decade ago, Turkey's GDP has nearly quadrupled, leading to a boom in public and private consumption and construction.
The industrial park has tripled in the area and the companies here have grown in size. We have increased the output of our equipment and scaled up.
The economic prosperity has benefited Turks across the board. Standard of living has improved and the average income has tripled since 2002. So it was a little surprise many decided to back Erdogan to continue leading the country.
Everybody knows that the Turkish voter votes in accordance to their pockets. So economic voting is key in Turkish politics.
But while the Turkish economy has come a long way in the last decade, it's shown signs of weakness over the past year amid domestic troubles. Mass street protests and a wide-ranging corruption scandal has seen some overseas investors leaving, a cause for concern in a country that heavily depends on foreign funds. The government has also been at loggerheads with the country's central bank over monetary policy, a conflict that could have profound consequences on the future of the Turkish economy. So while Erdogan has set an ambitious target to make Turkey one of the world's top 10 economies by 2023, critics argue he'll have to change his policies if that's to happen. The same policies that helped make him Turkey's first directly elected president.
Russia's economy expanded by 0.8% from the quarter from April to June, compared with the same period a year ago. That marks a slight decrease from the first quarter growth figures and is significantly less than the 1.2% growth forecast put forth by the economy minister last month. Russia's GDP growth had already slowed down last year, and analysts say the strain of Western sanctions will soon start weighing on overall growth. In late July, the International Monetary Fund slashed its estimate by over a percentage point to just 0.2% growth for the year. Let's take a look at how the markets fared on this first trading day of the week. We saw a very strong session here in Europe, following on from a positive trend in Asia. Germany's DAX ending up 1.9%. CAC 40 here in Paris up 1.2%. Investors seemingly reassured by an easing of geopolitical tensions on signs that Moscow will not be sending troops into Ukraine. Let's turn to some of the day's other business headlines now, focusing on the energy sector. The UK subsidiary of the French energy giant EDF has temporarily shut down 4 nuclear reactors in England over a possible technical problem with the boilers. The units in Hartlepool and Heysham are not considered public safety threats. Last year, the UK signed a €20 billion deal with EDF to build 2 nuclear reactors, as the country looks increasingly to nuclear power for its energy needs. Kinder Morgan will consolidate 4 of its oil and gas pipeline and storage companies in a deal worth about $44 billion. The merger will make the Texas-based Kinder Morgan the 4th largest U.S. energy company after ExxonMobil, Chevron, and ConocoPhillips. And the Swedish energy group Vattenfall and Munich City Utilities are joining forces to build a massive wind farm off the German North Sea coast. The project will cost some €1.2 billion. Expected to start working in 2017, the Sandbank wind farm will have 72 turbines, capable of supplying energy to some 400,000 homes. And we'll end with news of a wine bidding war. 2 private equity firms are trying to take over Australia's Treasury Wine Estates, the world's biggest listed winemaker. TPG Capital Management has now submitted a bid to rival last week's by the U.S. group KKR. Each value Treasury at around $3.1 billion. Treasury is undergoing a mass restructuring that will see some 175 jobs cut. It sells around 32 million cases of wine around the world each year. That's it for this edition of the Business News. Do stay tuned to France 24.